Hello friends, this is Raj Sastry from Raj Option Trading. Today is January 26, 2022. Let's talk about top big data stocks. As we all know, big data is an emerging market and everybody wants to make sense out of data. That's where these great companies come into play. So as you can see here, we got Datadog. This is a top dog in the data. They have a great platform which is a SaaS. And we got MongoDB. MongoDB is a great growth stock and they've been hit hard by this sector rotation. And it's time to look at MongoDB and see if we can buy this company. And then we got Snowflake. Snowflake is a legendary company. They've been doing great. They're signing up big corporations on the Snowflake platform. It's again hit hard, very big by this market rotation. And then you got VRNT. It's a profit-making company. Nobody talks about this company, but it's doing very good. And then you got WorkVia. It's one of my favorite. Nobody talks about this one also. This has been doing well. It's also profitable company. And then finally we got Elastic. Elastic is a great company. If you talk to any software developer, they must have used Elastic to really make sense out of the data and show the data in the website. So it's also a great play. Hit very hard, especially in this month by this sector rotation. So with that, let's jump in and look at many of these stocks and see which ones we can buy and what makes more sense. So with that, from a top news perspective, we got Datadog here. Datadog is down big time this month. Share price dropped around 25 month in just 1 month time frame. Even though they are increasing the losses, but their revenue grew nicely, and they are trying to improve the net income slowly but surely. And we got big data and analytics companies here. WorkVia, Elastic, MongoDB, as well as Splunk. They are the top companies here according to Investor Business Daily, and they help with the various things: data mining, cleaning, analysis, and so on and so forth. And then you got WorkVia here. It's a great stock. Nobody talks about it, but company slowly making progress and improving its numbers and helping customer. And then you got Steady Eddie here, Salesforce CRM, Mark Benioff's company. Stock is completely sold off on this big rotation game here. It's a great one to buy and hold for a long time. So with that, let's jump in and look at a few stocks here. As you see here, we got few companies at the top here. These are new companies, Confluent and Couchbase. I like both of these companies. They're completely sold off, as you can see here. By looking at the Altman Z score here, you can tell these are squarely about 2. These are very stable. They have a lot of money. You don't need to worry. Look, we got Confluent here. They got $1 billion cash. And we got here Couchbase, $208 million in cash. You don't need to worry. But right now, both these stocks are really in a very bad shape. It's probably good to take a look at these and buy slowly. Look, we got here Confluent, a little bit higher price to sales ratio. That's why valuation is high. That's why it's getting hit hard here. And then you got Couchbase. Couchbase is okay. Valuation is low. You could pick up some Couchbase here and buy slowly. And then you got Teradata. This was left for dead while ago, but this is coming back slowly. I would be a little bit careful here. Right now, you can buy some given RSI is 38, but it's up against bigger competitors like Oracle, so that's why you got to watch carefully. And then you got VRNT. VRNT is one of my favorite. As you can see here, just $51 company, and this is in the verge of making a net margin. As you can see here, right now it is 0%. Look, price to sales ratio is low. Its valuation is not high. It's done great. Look, it's done 170% in 5 years and 40% in 1 year. Not too bad at all. And then you got Oracle. Oracle is a undisputed leader in world style databases. Look, it's done very well. It's also trying to pivot into data center and also cloud, as you can see here. It's done great in a 5-year time frame. And Larry Ellison knows how to keep the company relevant. He's also buying Cerner, as many of you know. And then you got a few more here. Google. Google is a great play here. Sundar Pichai, he's running the company and leading it very well. Look at the performance. Even this $1 trillion company is putting up nice 199% in 5 years. And then you got a few more. New Relic. New Relic is a good one here. Look, it's as of now it's not making money. Net margin negative. But it's doing well over the long haul. Nice performance here. So all the stocks are get hit hard here. And we got IBM here, new CEO. He's trying to do the right thing here. Stock is up, as you can see, slightly after the earnings. I think it's a good one to buy as it comes down. And I got some of my favorites here. We got Datadog and WorkVia. Both are great stocks. I love both these stocks here. Look, we got WorkVia doing 764% in 5 years. It's the highest in this list here. Nobody talks about this company. WorkVia has got price to sales ratio 13, a little expensive, but it's a great one here. Net margin is right now it's negative, but it can turn positive pretty soon. I also like Datadog. It's a great play here. Stock is completely sold off in last month's time frame here. It's a great one to buy here and hold it for a while. They got a lot of cash, as you can see here, $1.4 billion. It's a growth company. And then you got a few more, as you can see here. I love many of these companies. SAP is a very steady Eddie stock. I say, SAP is a good one to buy. Right now it's sold off, as you can see here. Top financials here. Look, A grade from Morningstar. You could buy that one too. And then you got open text here. It's been negative, as you can see here. Right, it's got a nice financials here with the grade A from Morningstar. And I love CRM, Mark Benioff's company, Salesforce.com. As you can see here, multiples is low here. That tells you market, the valuation is low. We should probably not look at price to earning on this one. Let's look at price to sales. It's a good one here. Nice top line growth, as you can see here, but performance is not great off late, because of this market rotation. Good to buy some Salesforce.com and go from there. And then you got a few more. As you can see here, a few of these are great companies. Look at the 1 year performance. All these stocks are hit very, very hard by sector rotation. And that's why you got to look at the winners and buy some. I like MongoDB and Snowflake here, even Amazon. These are a great place. Right now they are out of flavor, but I think it's good to buy them slowly and accumulate a nice position. They will do great. And then you got few stocks which are really at the bottom here. Look, Splunk, Domo, Elastic, AYX. All these are down big time here. And I think many of these have got sales growth here. So you should look at some of those names with the sales growth and slowly buy them into this weakness and go from there. So with that, what we'll do is we'll go into a little more detail and look at one or two companies in a little more detail and go from there. All right, so first we'll look at the chart. As you can see the chart here, we got Snowflake. Look what's going on. Snowflake is coming down off late. Look, big, huge drop. Even though stock is dropping, keep watching the on the balance volume. It's pretty steady. So this is one of those explosive stocks. It's a great one to buy and hold. You talk to any Fortune 100, Fortune 500 company, most probably they got Snowflake to make sense out of data and bring data from multiple places and come up with the nice analytics and insights. That's why, don't think stock is going down. It's a great stock. It's just the sector rotation going on right now. Great time to buy some Snowflake and hold it. This is going to be a multi-bagger. And then you got Datadog. Similar thought process here. Stock is going down. On the balance volume is pretty steady. Datadog is the top dog in that area. I think you should buy some Datadog here. And then you got MongoDB. MongoDB, look, stock is coming down and on the balance volume is steady. You talk to any software developer, many of them love MongoDB for their simplicity, and you can keep on scaling MongoDB very nicely. A lot of folks love MongoDB. That's why it's good to buy now. I can see this as a acquisition candidate, one of these bigger companies like Oracle or SAP or even Salesforce. They can come and grab this company, even Microsoft for that matter. So it's a great one to buy. And then you got Elastic. Look what's going on. Elastic is dropped big time here. And on the balance, volume is also going down and slightly going up off late. Stock is completely sold off here. Look, RSI is 26 here, so it's a great one to buy if you have a longer term horizon. I say, buy some elastic. It will do very, very, very well. All right, then we got a few more here. We got, as you can see here, SAP. SAP is a great company, German software company, enterprise software. Look, stock down, up, down, up. Right now it's down. SAP is a very steady Eddie company. I say take advantage of this drop off here and buy some SAP. You will do very nicely. On the balance, volume is generally trending higher, but I think it's a good one to buy. And then got Salesforce.com, Mark Benioff's company. It's a great company. Look, stock has taken a big, huge drop here. On the balance, volume is steady. This company will come back with vengeance as this sector rotation ends. And then you got Oracle, Larry Ellison's company. Stock is coming back after the acquisition of healthcare IT company here, Cerner. I think it's a great one to buy. Look, on the balance, volume is down, but trying to go up here. It's a great one to buy. Long-term, great place, solid leader within Larry Ellison and Safra Katz. And then you got IBM. IBM is turning around with the new leadership. Arvind Krishna is doing a great job. Look, stock has gone up. I say wait for a little pullback here, then buy IBM. Given its RSI a little higher for me at this time, let's wait for a pullback. Fresh off their earnings, stock has gone up. Let's wait. So with that, let's jump in and look at a few more here. And we got Palantir. As you all know, Palantir is a great company. They started on the defense sector. Look, stock has come down drastically. On the balance, volume is also down. If you have a longer term horizon, you could buy some Palantir. It's a great company longer term. They got a lot of these long term contracts. They're expanding away from government and the federal government into public sector and commercial segment. So it's a great long term play. But right now, Wall Street does not have patience for these companies, because these companies are really high multiple companies. Then you got Splunk. Look at this Splunk here. Splunk has been dropping, and right now at this point it's trying to go higher. On the balance, volume is pretty steady here. A lot of folks love this company because of their logging and data, making sense out of the data. I think it's a great play here. If you have a longer term horizon, you could take advantage and buy some Splunk. And then you got AYX. This one is, it's been going down for a while, down. On the balance, volume is steady. I say buy this only if you have a longer term horizon, because I don't see too many bounces here. It's it's coming down without any going up too much. That's why this is if you want, you can avoid it. But if you have a very long term horizon, you could buy some AYX. And then you got Domo here. Domo has been coming down off late. It does go up, as you can see here. This one also good if you have a longer term horizon, not for short term play. So with that, what we'll do is we'll look at one or two companies in a little more detail. Let's start with Datadog. Datadog, as you can see, the top dog in this area. They've been doing great. And as you can see here, they got this SaaS platform that integrates and makes sense out of the data and give you the insights. So that's why it's a top leader, and they're doing very, very well. And as you look through the numbers here, from a numbers perspective, look, Datadog right now, earnings is going down, as you can see here. That's one of the reasons Wall Street does not like it. They want earnings to trend higher, but this one, earnings per share on an annual basis is going down. But look on the positive side here. From a sales perspective, this company knows how to grow top line. Nice top line growth here. Company is making money year after year. And shares outstanding is pretty stable here. Company is not diluting the share count. That's also very good. From a quarterly earnings perspective, look, nice uptick here. I love quarterly earnings growth here. This is what I like to see in any company. They're doing it. And from an R&D perspective, they're spending money on their platform. They want it to be competitive. I love companies spending money on the R&D in a nice clip. And look on the positive side here. Look, their quarterly net income is in a good trend here. Even though they don't make money, look, it's trending up. I can see them making money. in a maybe quarter or two, and it can become a great company, and Wall Street will start liking it the moment they produce earnings and quarterly net income. So that's why, even though right now Wall Street does not like these companies, I say, buy some Datadog if you don't have it, or even if you have it, take advantage of this pullback and buy some Datadog. So with that, next company we will talk about is WorkVia. It's also one of my favorite. As you can see here, they also have a SaaS platform here. They help with the cloud-based compliance, regulatory reporting solutions. So that's why it's again a great company to buy, and stock has been doing great. And most people don't know about this company, but it's slowly but quietly going higher, but got hit by this rotation of late. So as we see here, this one, look, from a earnings per share perspective, this is trending a little higher. As you can see here, I like the trend. It's slowly trying to at least trending in the positive direction from an earnings perspective. And annual sales is trending up. I like this trend here. I think it's a good one here. I like this clip here. And shares outstanding, not too bad. When the company is having top line growth, slight dilution is okay. This is not too bad at all. And quarterly income is increasing. I like the clip here. I love the companies growing top line slowly but steadily, and they're also spending money on their R&D, as you can see here. And this company also, like Datadog, they are slowly improving their quarterly net income. Even though it's negative, I can see this becoming positive in a quarter or two. So with that, I say, if you don't have WorkVia, or even if you have WorkVia, buy some more WorkVia, sock it away, take advantage of this whole big downturn, and go after these great names. So with that, thank you very much. Happy investing and trading. Please subscribe.